Amazon recently put $2.75 billion into Anthropic, an AI model company that competes with OpenAI and Alphabet. It's time to put that figure into context. So first up, this is not the first injection of capital that Amazon has put into Anthropic, a company that created the Claude family of AI models. It's in fact the completion of a planned $4 billion deal that saw the e-commerce and cloud compute giant invest $1.25 billion into Anthropic last year. So presumably, Amazon is happy with the progress that Anthropic is making. And you can kind of see why Amazon wants to have a horse in this race. After all, Microsoft has chosen an AI champion to back, Alphabet is building its own models, and Meta is taking a more open source approach, but one backed by lots of its own spend. In short, Amazon could go out and build its own models, it could go along with whatever the market and its competitors put out, or it can pour capital into a startup that it will own a big piece of and then can lever for its own internal and external needs. It's easy, I know, to get jaded at the sheer quantity of capital flying around the AI world that this deal falls under, and there's a couple ways to think about that. First of all, who doesn't love a competition inside of Silicon Valley? And that competition has heated up to the point that we are seeing big tech companies now invest more in AI companies than venture capitalists themselves. Let me remind you of some of these deals that we have seen over the last couple of years. Microsoft put $10 billion into OpenAI, and Microsoft led a $1.3 billion round into Inflection AI before eating that company's talent without buying the corporate wrapper that was around them. Elsewhere, Volkswagen put $2.6 billion into Argo AI, Anthropic has raised another $2 billion from Google, the list just goes on. A billion here, a billion there, and sooner or later, you're talking about real money. Why is there so much capital flying around? There's a few things that you should keep in mind. First of all, no major tech company wants to miss a platform shift. Microsoft is still stinging from missing the shift to mobile years ago. And, perhaps even more importantly, it's harder than ever for big tech companies to buy smaller firms thanks to antitrust pressures. So it's simpler to just invest and buy minority stakes than to take a whole company under their wing. This means that big tech companies are today competing via their checkbooks in a space where they can't take majority stakes. And as a result, we're seeing massive dollars, sure, but at huge valuations, with big tech companies betting that they can develop the future of AI through their subsidiaries that the world's businesses and consumers will want to use. Or, as my friend and colleague Devin Coldaway put it over on TechCrunch, the AI world is a little bit like a roulette table, with, say, OpenAI and Anthropic representing black and red. No one knows where the ball is going to land, but if your bitter enemy puts all their chips down on red, you might as well bet on black.